What is exchange-traded funds, ETFs? Exchange-traded funds, ETFs, hold a portfolio of securities that replicates an index and are listed and traded on the stock exchange. The return and risk on ETF is directly related to the underlying index or asset. The expense ratio of an ETF is similar to that of an index fund. ETFs are first offered in a new fund offer, NFO, like all mutual funds. Units are credited to Demat account of investors and ETF is listed on the stock exchange. Ongoing purchase and sale is done on the stock exchange through trading portals or stockbrokers. The settlement is like a stock trade, and debit or credit is done through the Demat account. ETF prices are real-time and known at the time of the transaction, unlike NAV which is computed end of a business day. Their value changes on a real-time basis along with changes in the underlying index. Gold ETFs have gold as the underlying asset so as to provide investment returns that closely track the performance of domestic prices of gold. Each ETF unit typically represents 1 gram of gold. For every unit of ETF issued, the fund holds gold in the form of physical gold of 99.5% purity or gold receipts. They are also allowed to invest in the gold deposit schemes of banks to a limit of 20% of the net assets of the scheme. The custodian of the fund is responsible for the safekeeping of the assets. The actual returns from gold ETF may be lower than market returns due to the effect of fund management expense charged and cash holdings. Mutual funds are subject to underlying risk. Please read all documents carefully before investing.